Everybody, this is John, and welcome to the free video. And for today, the big news is the dollar index. Major consolidation on the weekly chart, and the daily is about to re-explode to the upside. So once we take out these highs, which we will, I think this thing is going to just get a lot of short covering because a lot of people were not expecting that the dollar was going to stay so strong. They thought they'd see more of a pullback. All right, so what is this going to impact? The euro, so FXE, looking for this to continue going down. I think ultimately this is going to 100. Okay, so that's 10 points below where we are. And the nice thing with this, this is a trade that we put into the silver portfolio, and the nice thing about this is that the implied volatility on this is only 10%. So, if you're trading like a stock that's got 50 or 60% implied volatility, that can make those options very expensive, where these are very low implied volatility. So you can go, that's fantastic. So I really like that one. And then looking at USO also, which represents oil, of course, a stronger dollar is also going to keep some downside pressure on that. And then gold's the only wild card here. Gold, quote unquote, should be going lower, but like today it was up with the dollar really strong. So to me, this is one just to stay away from right now, because the goal here is not to be right? The goal is to make money. And if there's markets that are just kind of like it doesn't quite make sense, great. You don't have to trade it. Focus on the stuff that makes sense. So buying puts on FXE, I would much rather do that than doing anything with GLD here, because GLD is just, it just can't really decide what it wants to do. I do think ultimately it's going to go lower. It's just how much heat do we want to take on something like that. And then last but not least, I want to look at the S&Ps here. Gosh, the stock market here is just doing fantastic. Couple things I want to point out here. So we all know it doesn't go up forever, but we also know shorting is no fun. So you can see this move here and then the resulting sell-off. I think we are, at this point, we're very similar to where we were right here. It doesn't mean that we're going to have a sell-off like this. We may just have a sell-off like this, okay? But a couple of things here that stand out to me is, one, the daily squeeze is done. Okay, it's now officially done. So that means the squeeze is over. That means that the market, at a minimum, typically at this point will trade sideways, and sometimes it'll actually roll over and die. If we drill down, if I can type this in correctly, and I'm going to bring up a 78-minute chart on this side and then a 195-minute chart. I did it again. 195-minute chart on this side. I don't know about you guys, but even though on a daily chart and a weekly chart the stock markets are very bullish, here we've got on a 78-minute chart A wave below zero, B wave below zero, C wave crossing, and a big fat squeeze with momentum to the downside, okay? And we've got a 195-minute squeeze with the A wave below zero, the B wave below zero. The C wave is still strong, okay? So on something like this, I think I'm looking at both of these to potentially trigger short. It doesn't mean that the market is topped. It just means we're setting up for a pullback, okay? And that means I want to hedge. So where could we pull back to? I think we pull back to 2080. That's not a huge pullback, but it's not something that I want to hold a bunch of longs through without protection. So how do you protect yourself? Well, the easiest way to do that would be here is just to short some futures. So here I just shorted 10 futures contracts. My open P&L is down because I shorted these at 21.05. We're at 21.06. It's showing a profit here because I think we closed at 21.10, right? So I want to hold on to those. The other way to do this would be to buy puts on the Qs, which is what I also did here. And you can see right now they're underwater, but they're 22 days out, okay? But the idea with this is that you can time the hedge so that your net liquidating value stays about the same. What happens a lot of times is people hold on to a bunch of positions, their account takes a hit, then the positions recover, and now their account's back to where they started, and they sigh in relief, look, ooh, thank God I'm back to where I was. If you hedge properly, what happens is here's where your balance is. Okay, you hedge, and while like the market's falling and stuff like that, your net liquidating value stays the same. Then you take off the hedge and your positions recover. Well, instead of going just back to where you were, the recovery of your positions takes your account to new highs because you were hedged. And this is part of the art of consistency and knowing when to do it and how to do it and how much to hedge and all that kind of stuff, which is a lot of fun. Okay, and as a final reminder this week, this is the big class of the quarter. Options Trading Mastery. You go to simpleroptions.com/mastery. One of the things that I'll be talking about in detail and showing you during the 3-day live trading is how to hedge, okay, and how to do it in real time and what instruments to hedge with. And this is essentially kind of, a lot of times, people will do good for a while and then they get thrown for a loop. Okay, it's like, wow, man, this 3-day pullback just really knocked me down, and it shouldn't. You can keep your positions if you know how to hedge. Okay, and during that 3-day live trading mentorship, we're going to be talking about that. We're going to be talking about when to defend a trade that isn't going your way, how to stay fresh and stay out of a trading rut, my favorite day trades for options, where my average holding time is less than an hour. That's going to be during the live event, which will be awesome. And then, of course, during the Saturday class, we're going to go through the highest probability trade setups that I like, and also ranking what option strategies work best with each setup. So one question that's come up is like, John, I took your consistency class and I took the debit spreads class, so how is this different? Think of that as logical stepping stones up into this class. It's kind of like, debit spreads is options 101, consistency is options 102, and now this mastery class is options 103. And it's the thing that ties everything together and makes you a trader that has the complete picture of how to handle the markets. Okay, and it's great that if you know how to do debit spreads, that's awesome. And it's great that if you get the idea of consistency, but what we're talking about too is doesn't matter what the market throws at you. Okay, the dollar's exploding to new highs. Great. These are the option strategies that you want to use in that situation. Okay, or the stock market here looks like it's starting to top out. What do I do? Great. There's no need to panic. This is the specific option strategy that you do in that situation. Okay, and in that, is it going to be a butterfly? Is it going to be a credit spread? Is it going to be a debit spread? Or is it going to be a straight put? There is a specific checklist for each situation. So my goal with this class is that when you're done with it, you can essentially take your trading to the next level. You can sit in front of the markets. You never have to wonder what you're going to do next, and you can get into a flow where you're generating not only profits consistently, but you're protecting your most important asset, which, well, first of all, is your trading brain, okay, but showing you how to do that. But secondly, your account balance, okay? And if you've ever been in a situation where something happened out of the blue and just completely knocked your account down, you never have to be in that situation again, okay? And that's what makes the difference between people who do this consistently. They can quit their jobs because they can produce a steady income and they can protect their accounts versus everybody else, okay? So how does this work? You guys know I put my heart and soul into these classes. This is the stuff I really like doing this. I like documenting what I've done. I'll be showing you my live account. I'll be taking live trades. My recommendation is, of course, the 3-day mentorship class. It's $997. I do mentorships for 3 days for $5,000. That's more of a one-on-one basis. This is something where you get the same idea, the same look and feel of that by looking over my shoulder online, and I'm able to answer questions. This is a smaller class. It's limited in size, first come, first serve, and we'll be able to spend 3 days together. Now, the nice thing is that if you sign up for this, you get the Saturday class for free, okay? So it's not $497 plus $997. It's just if you do this one, as a bonus, you get to do the Saturday class, okay, which is awesome. Also, you'll get homework. If you're a brand new options trader, you're not sure what to do, you're going to get some homework. included with the class and some books to read, and you have plenty to, so by signing up now, you have plenty of time to prepare for the class, and you'll be rocking and rolling and ready to go and be able to maximize that value very, very much. Now, is it okay to just do the Saturday class? Yes, of course, if that's all you're interested in. So, I would encourage you to look over the page if you have any questions. These are all the skills and the skill sets that you're going to be able to acquire, and it's going to essentially show you how to kind of change your behavior so that you can get into that trading zone and do this effortlessly. Okay, so anyway, I'm completely looking forward to this class. It's going to be awesome. simpleroptions.com/mastery. The Saturday class is March 7th, and then the 3-day class will be the 10th, 12th, and 13th. All right, you guys have an awesome rest of the evening, and we'll see you at the next update.